Chapter 9. Fibonacci Ratios, Natural Harmony in Chaotic Systems. In previous chapters, we explored the chaotic structure of financial markets through the lenses of physics, fractals, and psychology. We saw that price movement is neither linear nor predictable, but rather the outcome of dynamic forces behaving like a chaotic system, highly sensitive to initial conditions, shaped by bifurcations, and driven by interference waves. Now, we turn to Fibonacci ratios. Not as a technical indicator, but as a natural expression of chaos itself. These ratios reveal a hidden order within disorder, a code of nature where perfect symmetry does not exist, and balance is achieved only through asymmetric convergence. The core principle, y 0.5, does not exist in nature. Imagine trying to cut an apple into two perfectly equal halves. It sounds simple. Yet in nature, such a division, a perfect 0.5, does not truly exist. At the atomic and quantum level, reality is not continuous but discrete. Matter cannot be divided infinitely without energy loss, uncertainty, or structural disruption. Quantum mechanics teaches us that every attempt at perfect symmetry introduces deviation, and that deviation changes the system. If 0.5 does not exist, what does? The answer lies in the golden ratio, 0.618, and its inverse, 0.382. These are the natural equilibrium points toward which chaotic systems converge. In markets, this appears as a center of gravity for price movement. Price does not gravitate toward a perfect midpoint, because such a midpoint is an abstraction, not a physical reality. Instead, price oscillates around it, never touching the center, but constantly orbiting it through dimensions we do not directly see. The price chart itself is two-dimensional, time and price, but real market motion unfolds in a third dimension, mass. Mass represents energy distributed over time, often expressed through volume and participation. This hidden parabolic element causes price to behave like a physical body under gravity, continuously seeking temporary equilibrium around the 0.618 and 0.382 zones. Fibonacci ratios as a fractal force. Derived from the Fibonacci sequence. 0, 1, 1, 2, 3, 5, 8, 13. Fibonacci ratios are a direct expression of fractal power. Each ratio, 0.236, 0.382, 0.618, 1.618, embodies self-similarity across scales. These patterns appear everywhere. In plant growth, biological structures, spiral galaxies, and wave mechanics. Markets are no exception. In price behavior, Fibonacci ratios are not merely lines on a chart. They mark zones of energy concentration, areas of liquidity, tension, and potential transformation. They represent the oxygen of movement. Each price range has its own wave frequency, influenced by Fibonacci relationships. 0.618 acts as an upper convergence zone, where energy accumulates and enables breakouts or reversals. 0.382 represents a lower equilibrium, functioning as a gravitational pull for retracements. Extensions such as 1.618 describe natural expansions, movements that elongate according to organic growth laws. Contrary to common belief, Fibonacci ratios are not static support or resistance levels. They are dynamic, shaped by interference waves and constantly redefined by the system itself. They highlight where liquidity gathers, where participants pause, breathe, and decide, thereby generating the next phase of chaos. Fibonacci is not collective awareness. What appears as an attraction to Fibonacci levels is not collective consciousness or coordinated behavior. It is a natural human response to the tension between fear and uncertainty, the same tension that produces asymmetric equilibria throughout nature. Markets do not move because traders believe in Fibonacci. Traders respond to instability, imbalance, and risk. Fibonacci ratios emerge because they describe how systems, human or natural, resolve tension without symmetry. The absoluteness of Fibonacci ratios. Fibonacci ratios are absolute within chaotic systems. They apply to every element of the data structure, not only price. They appear in volume, mass, price range, time duration, volatility expansion and contraction. This leads to structures such as the Gann square, where ratios govern both price and time, creating an invisible grid of angles and trajectories. The result is a natural force map, one that organizes movement relative to time and energy. Moreover, Fibonacci ratios manifest even in absolute price values. When an asset approaches prices such as 1618, 1236, or values containing Fibonacci proportions, significant reactions often occur.
Why?
Because the number itself is not the cause, the scale and proportional relationship are. These values are not random. They are expressions of the same hidden order that governs chaotic systems across all domains. They represent the system's dominant attractor, the force that temporarily organizes chaos into harmony before releasing it once again. Summary: Fibonacci as description, not prediction. Fibonacci ratios do not predict markets. They describe how chaos seeks balance. They are not trading tools, but structural fingerprints, evidence that financial markets obey the same organizing principles as waves, growth, and gravity. The market does not move according to human logic. It moves according to the same ratios that organize leaves, storms, and galaxies. And in that sense, Fibonacci is not a strategy, it is a language.